the 24th. Every Sunday, we have a chance to do a kind of weekend review and an outlook for the week ahead, given that at least most markets are sleeping, although everything seems to be 24/7 these days. Let's kick off this morning with Dr. Lee Chen Sim, who is known to many, assistant professor at Khalifa University in the UAE, but a specialist on the geopolitics of energy, both in Russia and the Middle East. Dr. Lee Chen, I wanted to start this morning's conversation with your takeaway from the comments by the Russian general. Still some debate whether it's official policy or not, but ultimately it seems clear by what you see on the ground. But Russia aiming for full control of Ukraine's southern regions and the East Donbass, but the southern regions most notably, which is the coastline of the Black Sea. What do you think this means for energy and energy flows out of that region?
Good morning, Sean. Good morning, everyone. It's a great question. I think that if Russia does, and that's a big if, they manage to control the coast and obviously Odessa and the ports, that will be a huge blow to Ukraine's ability to export, especially their wheat and things like that. It's already, of course, being severely curtailed with the war, and with shipments, with insurance. I mean, it's really being hugely curtailed. But if it's a full Russian control, then that's going to have severe consequences for food and other stuff going in and out of Ukraine, particularly from the Black Sea to the Middle East. So I think that's really concerning. But whether or not they are able to control it, it's a second question. And even if they can control that, the Russians, the question is for how long? So those are all things to bear in mind.
Let's go to India. Bill Spindle, Council on Foreign Relations, International Affairs Fellow in India. Ultimately, Bill, to track the massive impact of the energy transition in India. But I wanted to get your views a little bit wider on India's role in this current global story. We had the British Foreign Minister there last week. We have the President of the EU, Maria von der Leyen, coming to India this week. There is a big charm offensive now to get India onto the side of the West, or its natural place with the sort of democratic alliance against Russia. Your thoughts on India's position, its posture in this geopolitical standoff, and is it likely to change?
Yeah, I think we talked about this last time. Thanks for having me again, by the way. It's great to be here. I think India is going to continue to remain on the surface as neutral as it can appear in some ways. But really what that means is they're going to avoid condemning Russia. I think they're going to avoid outright hostility towards it. They've got a lot of reasons to continue their relations with Russia. However, on the beneath the surface, or even quite publicly, they're also going out of their way to host foreign visitors from the West, to send out many signals that they're certainly not choosing sides with Russia, even if they don't want to condemn it outright. So I think that they'll continue with that as much as they can. Again, some point, perhaps they'll get boxed into a point where they have to make a choice, but they'll resist that really quite forcefully and do their best to continue on the track they are now, which is beneath the surface pretty pro-Western, and probably behind the scenes reasonably critical of Russia, but publicly they're not going to go that far.
Let's go to Kuwait, to Sarah Akbar, Chairperson and CEO of Oilserve Kuwait and non-executive director of Petrofac. Sarah, despite all of this turbulence we've seen over the last 3 of the last 4 weeks, where oil prices have actually declined over the week, that despite all the shock and awe of this conflict in Ukraine, that oil prices are still sort of on the sober end of near 100 rather than 150. Ultimately, demand weakness is lingering and not going away. Your thoughts on that balance between those two things with a week or so ahead of the next OPEC meeting?
Well, good morning, Sean. And so let's talk about the two parts of the equation, the supply and the demand. So yes, I think throughout, if you look at the numbers from OPEC, they will always expecting that we are almost in balance and the difference is very little, and they were not expecting huge growth and demand. So what happened over the few couple of months, let's put it this way, was a complete shock to actual numbers of forecasts they had. That's why this was the basis for them sticking to the plan and not changing anything. And I think now we should realize that the world after COVID is not fully recovered. It's not every country in the world that came out of COVID that are fully recovered economically so that we can expect this huge demand growth to the pre-COVID levels. So the reality is this: the world itself, from an economic point of view, is fragile, and now it's more fragile because of the war in Ukraine and all what happened there. So that's why you see that people talking about shedding something like 1 million out of the demand picture, which goes back to the kind of same numbers that OPEC was forecasting anyway. And that's why the going forward, I think they are more confident on the numbers they had initially to go for the slow growth. And as you know, today, the reality is that none of the OPEC countries have any excess demand to put into the market, especially with the Russian crude being squeezed, and Libya, they have 500,000 out of the picture. So this kind of shock, I think, will rebalance it one time.
I mean, in essence, Sarah, the next OPEC plus meeting would seem nearly irrelevant. They're already 1.4, 1.5 million barrels below their own production quota. So meeting next week, I mean, it's barely a headline.
Correct. Like I said, from supply point of view, none of the OPEC countries have any surplus that they can put into the market. So the surplus game is no more there. And they will continue to do what they can do. Of course, as you see now, there are big plans in every single OPEC country to increase production. And this is the normal cycle that we go through, and the market for as long as I've lived it. They see this demand, everybody jumps in, they put more investment into supply, and then you have oversupply, and then you have the same cycle going forward. So
it's
yes,
nice to see that your peer group, at least those publicly traded, Schlumberger back in the money. Everybody's making big money on the services side. Dr. Lee Chen, coming back to this situation on the southern coast of the Black Sea, which of course where, not as you talked about in your earlier point, where the exports of Ukraine come to the world, and obviously most notably food, but also it's a very important exit point for Russian oil, seaborne oil to come out through the Black Sea. And we saw overnight the Turks blocking the air routes now, the skies above Turkey. Russia can no longer fly through Turkish airspace to Syria, which of course they're also managing an engagement there for the last few years. My question is, ultimately, this conflict in the south of Ukraine, if indeed Russia does make progress to close Ukraine's access to the Black Sea, how is Turkey likely to respond to that, and other countries in that Black Sea region, do you think?
Well, Turkey being the NATO ally that's closest to all the action there in the Black Sea, I think it will have a special role. As you know, with the Bosphorus Convention, it's actually not, it has a control over the routes in the Black Sea, but that's particularly linked to warships, right? So most of the Russian warships, whatever have been in the play in the war, have already sailed there. So it's not a question of closing it, because the chickens are already already there in Crimea, in Ukraine, in the Black Sea coast. So closing it now would make no difference, right? Because the warships are already there. But you're right. The question is, once Russia gets control of that, What are the rest going to do? I'm afraid that there's not much stomach in NATO from my point of view for engaging that, for forcing the ports to reopen, from forcing the waterways to be open if Russia does decide to control it more strongly. So I don't see any appetite from NATO to actually, take any action there in the Black Sea.
There could be an action taken to close the Bosphorus for commercial purposes, perhaps. I mean, that I think the Turks would take that to be quite a serious threat for Russia's domination of the Black Sea for their own well-being, and I sense that they will be doing all they can to ensure that doesn't happen. Bill, India, of course, is facing the full force of this global economic slowdown and the burden of these elevated commodity prices. We've already seen the economic growth forecast for India, which obviously remain quite big in relative terms, but we're at 10% at the beginning of the financial year, now downgraded to 8 to 7. This current sort of composition of factors is having a big impact on India. How is it, do you think, influencing the decisions that they're currently making and will continue to make given the pressure economically?
Yeah, it's definitely having a toll on India's economy. They've really got sort of the same problems many other countries that are importers like themselves have, and they've got it much worse in many cases. They are scrambling to grab onto any sort of energy they can get their hands on. They're ramping up coal production internally. They're shifting some oil purchases over to Russia, to the consternation of some other countries, though I think it's really quite small. So they're going to continue to scramble and do that. But for sure, the economy is going to take a pretty significant hit in the next year or so as they try to recover from COVID.
We were already seeing reports of blackouts in India vis-a-vis the already squeeze on the existing power infrastructure. How do you see that? I mean, you're obviously in India on a special assignment to report on the transition and the move towards net zero. How much stress is there in the Indian energy system, even without these added pressures?
Quite a lot. But I think, India's got this situation that Europe faces, that really the whole world faces, of a short-term versus long-term. What do you do in terms of this energy transition? In India, you can really see it acutely. Short-term, it's scramble for every form of energy you can get. Obviously, the easiest ones to grab onto and try to obtain at first are fossil fuels. So they're expanding those. Coal, India is producing more coal than it has in years. Or decades maybe, and they'll continue to try to grab every barrel of oil they can get at the cheapest price they can get it. However, long term, over the 5 to 10 year period, nobody here, the message is coming through loud and clear that they're hugely vulnerable to this. I mean, part of the reason they're scrambling for coal is because Indonesia is intermittently cut off coal exports. They're seeing their current account is being clobbered by the current problem in the oil market. So long term, they're going to continue plowing forward with renewables as fast as they can. I'm going up to visit a huge hydrogen project tomorrow that Reliance has underway. I'm sure they're pushing forward with that ever faster. They're putting $80 billion into that over the next 7 years. So long term, I think the message is clear and being received, that they need to push forward with this energy transition as fast as they can, now for security reasons as much as for economic reasons.
Sarah, we have news overnight over the weekend that the Iran-Saudi talks have resumed in Iraq, as reported by some of the international news agencies. At the same token, that the Iran nuclear talks in Vienna appear to be moving back into the deep freeze. How do you read into this regional sort of bilateral engagement Iran-Saudi, which of course seems to be going on in the background now for many months, although as it was suspended is now back?
Yes, I think, the region is really benefiting from this current economic environment. Every single country in this region now is enjoying this high oil price. So the budgets are all balanced and some have surplus. So it's time for growth and for prosperity. I mean, I realize many parts of the world are going through difficulties, but this is the part that is actually benefiting from whatever is happening elsewhere. And that's why, in that sense, people want to, to maximize the benefit. And one way is to really reconcile all the differences. As you know, the main driver behind these discussions is to settle many issues that we have in both Lebanon and in Yemen. And as you can see, Syria now, it's quiet. Nobody talks about Syria anymore. Mr. Assad came to the UAE. They're trying to put them back into the system. And with Lebanon, things are much clearer now because they are talking, and there's been some support from the region, from the Gulf countries into Lebanon. So trying to stabilize all parts of this region became all of a sudden a priority on everybody's agenda. And partly to solve this, you need to talk to Iran. And that's why all these discussions resumed. And as you saw, even the ceasefire between Yemen and between Saudi, I mean, they're not hitting each other anymore. I mean, since the beginning of Ramadan almost. So
do we need the talks in Vienna anymore? I mean, the nuclear talks, is that...
Definitely that should go on. And I think, as the Iranians said, they will go only there if they are going to sign. And I don't see the movement to sign, but eventually they will, because the region has to stabilize. And to stabilize, you do need to get those two things in parallel. One of them is the Saudi-Iranian relationship, and the other one is the US-Iran relationship. So it's prime time. As you know, over the few weeks, all the stars are aligned for us. And if you look at the sky, every night now, you will see 4 or 5 planets all on the level. So maybe it is our time to settle and prosperous and go into real dynamics of development, rather than the situation we had before, where no stability, no political stability does not bring the real stability and the development of the region. So it is prime time.
Well, it may be certainly in the bigger picture of things, the last opportunity, or the last great oil windfall, perhaps. I mean, not that it could be 10 years, but ultimately, if this windfall isn't used for progressive transformation, then it might be the last chance. That's a slightly tangential subject, but nonetheless, I think it is an important one. Dr. Li Chen, I wanted to get your views on the exiting from the Russian energy system. I think Shell were quoted over the weekend as describing it as a nightmare to try and offload their assets in Russia, which are not insignificant, right? These are very large, very valuable assets. And clearly, it seems the only buyer in town are the Chinese. Your thoughts on this exit and what the likely outcome or impact it will have in the mid to long term?
Well, I think it's not just Shell who's describing it as a nightmare. I think for BP and for every other investor there trying to divest or somehow get rid of these assets, it's going to be quite a long process, very expensive. Obviously, they have to take hits on their bottom line. But yes, the only investors in town seem to be willing to pick them up are the Chinese, because they have the cash, they have the money, and they have they have their other considerations. They're not as ethically conscious as perhaps other Europeans about picking up Russian assets. So I do see them as probably the only buyer in town. which is actually, since there's only one buyer, Russia doesn't really have much bargaining power in that sense, since they basically only have one buyer. So I don't see them as, gaining a lot from that. Certainly, they're happy to have Chinese in as investors, but the Chinese will drive a very, very hard bargain, since they know they're basically the only game in town. So it's not, fantastic news for Russia. They'll have to be willing to compromise very hard.
What do you think that means? Sorry, go ahead, Bill.
Sean, I was just going to jump in there for a quick second to add on. I spent quite a bit of time in Iran in the early 90s as the Western companies pulled out under sanctions. And the Chinese, these same companies, Chinese moved into many of these Iranian fields and took them over. And one additional problem is they really weren't able to boost production in these fields. They simply don't have the technologies that these Western companies were brought in to boost long-term production in aging fields. And the Iranians were extremely frustrated with the results of bringing them in. They had no choice. That's sort of where the Russians find themselves.
We've seen the same, I think, in Venezuela as well in recent times. That long-term consequence for managing the reservoirs. Sarah, you'd be well placed to speak to that, although I know there isn't too many Chinese operators in Kuwait, but they have had a big inroad into Iraq, the service operators competing with you and your peer group. Have they come much more? I mean, obviously Bill is referencing in Iran in the 90s, but now the Chinese operators and service companies have become a lot more competent. Would that be fair to say?
Oh, it's very fair to say. When they went into Iran, the issue was not as technology as much as it was understanding the fields, it takes a long time for them to well positioned. And don't forget, Iran, after all, was under sanctions. So there wasn't a lot of equipment material that they could have brought in. But now dealing with all these Chinese companies, they came a long way, really. If you look at them, how they perform in Iraq, the best drilling companies we have, even in Kuwait, Sinopec came into Kuwait a few years ago, 6-7 years ago, and now they have 50% of the market, and they are doing a fabulous job. The same thing if you go into Iraq now, the drilling companies, the service companies, and the operators, they have really learned a lot. They came a long way. So talking about technology, talking about ability, management capability, I think they have it now. Yes, I agree, on the early 90s, they weren't there. But at this point in time, if you look at the big names, the Sinopec, the CNOC, the CMPCs, no, they do have that ability, and they have access to most of the equipment is manufactured in China anyway now. So I guess they will be able to manage these fields. Yeah,
and they can compete obviously quite on cost, quite aggressively. Let's go to the survey question and then get everybody's thoughts for the week ahead. As I said, last week was the 3 of the last 4 weeks pricing declines. Will this trend continue with the further revisions downward for global economic growth? The big headline really last week amongst all of them was, I think, the revision by the IMF of the global economic outlook being very, very pessimistic. And we are going into a cycle now of tightening as we go into the Fed. Bill, welcome your thoughts on that. Obviously, speaking slightly wider to your remit in India, but nonetheless, raising rates in the US does impact emerging economies who have borrowed heavily in dollars across Asia. Your thoughts on this as we move forward week ahead? There's clearly, it seems to be crystallizing clarity that the Fed is going to go into a much more robust tightening cycle than was only thought a week or two ago, and the ramifications for that into Asia.
Yeah, I think we've got a pretty good handle on the parameters of the supply shock at this point, and the big open question is more on that demand side. What's the Fed going to do? That seems to be a kind of evolving situation for the worse. And then the COVID situation in China, which just seems to be a big open question as well. So it just seems like those kind of demand questions are going to overpower the supply questions that we kind of have some handle on.
And on that point, Bill, just in terms of an update from the ground in India, how is COVID there now? Obviously, a year ago, it was like an Armageddon nightmare, or what was it, a year ago, about a year ago. How is the situation now?
It seems to not be affecting things too much economically. It's still clearly around. Like I said, I'm visiting a big oil facility tomorrow, and they're testing me every day for 4 days prior to going. So people are clearly worried about it out there and having the sort of impact it might have in other places. But it's not, it's not a big economic factor at the moment.
Dr. Lee Chen, I'd just like to get your final thoughts. Looking ahead, we still have out there the question: will they or won't they, the European Union, sanction Russian energy? It looks like that question is increasingly no, they won't. Your thoughts on where that goes at this point, and the decision before Europe?
Well, I think the longer the conflict goes on, the more pressure there will be on Europe to take that decision, difficult though it may be. So what we'll see, if the war expands, as you mentioned, it's really in the east, if it goes to the south, as we talked about earlier, but more so if the Russians really intend to push up all the way to the Moldovan border and expand that conflict. So the more they expand the conflict, the more people will be hurt. And that will also, I think, make markets in Kazakhstan also quite worried, because right up to the Moldovan border, that's where you have the Russian-speaking minority in Moldova, in the breakaway Republic of Transnistria. So you also have a lot of Russian-speaking population in Kazakhstan, which is of course a big oil producer. So I think that if the Russians do push to the Moldovan border, it will spook the Kazakhs. And I think then there will be even more pressure on Europe to actually take stronger action. So the longer the conflict goes on, the more it spreads. That's where the pressure will ratchet up on Europe.
It does seem, Dr. Leach, and that the signals out of Europe over the weekend is on this requirement by Russia to pay for energy in rubles, that they're finding some kind of nuanced way through that in order to try and facilitate it, i.e. the EU have said it will not be a violation of sanctions. How big a deal do you think that is? Is that a big win for Putin?
Well, I think it's a big win for both, because the Europeans, people are smart. They will find ways to get around it while keeping within the letter of the contracts, which are signed with Gazprom, in which I think something like 95% are in euros or dollars. So the Europeans will find a way to pay that and say, okay, I've paid you this money, it's actually in euros or dollars, and what you do after that, it's your business. So I think both sides will find a win out of that. Oil and gas sales will go on, but there will be more and more pressure, as we talked about, to actually sanction oil. And who knows after that, gas, but it's going to be a very hard sell for the Europeans to do that.
Okay, let's get the last word to Sarah this morning as we get the response of our survey question. Will this trend continue? This oil price have declined in 3 of the last 4 weeks, even though they remain in that $100 to $110 range on Brent, still very elevated, but nonetheless, all things being neutral on any given week, as long as the Russian war in Ukraine doesn't blow up into something much more, it seems that the price is finding its level closer to 100 than 120. Sarah, your thoughts looking forward, week ahead, on this point?
So I do agree that the 100 is where we be hovering around. I forgot to mention one thing.
Please.
Important thing. This was regarding the Durra field, the gas field that we are trying to develop. And this is interesting because this gas field has Kuwait, Saudi, and Iran. And since we announced jointly the development of the field between Kuwait and Saudi, the Iranians came up and they said, we have a share in this field, and they started some issues. But I believe this is, again, one of the drivers for the discussions in Baghdad between Saudi and with Iran. And if you notice, Iran is all about gas. And potentially, if you develop all the gas in Iran, you can curb a lot of the production the gas production in Russia, but this will come in time. So overall, I think we are in the right spot, around $100 for the oil price in the coming few weeks and months, probably a couple of months. But after that, I think with summer and with the, it's the normal, going back to the normal cycle that we have always been throughout the year, where, driving starts and you will see that the balance between supply and demand around 100 million barrels. Again, $100, 100 million barrels. That's, I think, the thing that we are looking at here now.
Well, we'll have to wrap it up there. As I said, oil prices did decline last week 5%, but the week ended really all about equities and the bond markets and less about oil, as the markets start to digest the probability of a series of significant Fed rate hikes and the consequence of that for the US economy, which could be accelerated into a recession given the scale of tackling inflation, or will the Fed flip-flop and back away from that pretty aggressive posture. But nonetheless, I think the week ahead, it'll really be much more about the equity markets than the oil markets, unless there is some major new development in the Russian-Ukraine war. I'd be watching equities rather than commodities next week. That's a wrap. Thank you so much, Bill. Great to have your thoughts and insights from India. Sarah, as always, from Kuwait. Dr. Lee Chen, sitting in Abu Dhabi. Thank you really for your insights today. Very important to keep an eye on the Russian energy industry as the Western companies extract themselves and who goes in their place. Seems like if you had a few $1 billion, they'd be valuable assets to buy. Thank you so much. Have a great week. We're here every morning at 10:30 UAE time. All the best.
Thanks, Sean.